Bitcoin represents the digital transformation of capital. ETFs shows that every day in the last 5 days, $481 million is flowing out of the analog world into the digital world. Bitcoin is, in essence, the conversion of analog capital to digital capital. The name of the show is making money. That's what everybody wants to do, and money is capital. Money is economic energy. What is money? I had never questioned what is money. And then we explored it together for many, many hours. and when I finished that exploration, my conclusion was money is economic energy. Economic energy is capital. Economic energy is wealth. And so if you think about the wealth in the world, there's maybe $900 trillion of it right now. And it's tied up in real estate, in stocks, in bonds, in currencies, collectibles, etc. The challenge is that that capital is analog capital from the 20th century, and Bitcoin represents the digital transformation of capital. And your chart you just showed with those ETFs shows that every day in the last 5 days, $481 million is flowing out of the analog world into the digital world. And what's going to drive Bitcoin is, in essence, the conversion of analog capital to digital capital. The killer use case is capital preservation and capital appreciation. And, the name of the show is making money. That's what everybody wants to do, and money is capital.
Don't forget to subscribe, traders. Let's continue with the interview to analyze it later and also comment on some of the most important news of the day. Money serves as the lifeblood of economies, a fluid force powering transactions, investments, and growth. Michael Saylor, at the helm of MicroStrategy, champions a profound perspective on money, viewing it not merely as a medium of exchange but as economic energy, capable of igniting innovation and propelling businesses forward. Central to Saylor's vision is the transformative potential of Bitcoin, a digital currency that transcends traditional monetary systems. Embracing this ethos, MicroStrategy embarked on a paradigm-shifting journey, pivoting from conventional business models to become a trailblazing entity in the realm of Bitcoin. Saylor's emphasis on money as economic energy underscores a fundamental truth: in today's dynamic landscape, currencies are more than symbols of value, they are catalysts for change. MicroStrategy's strategic shift towards Bitcoin exemplifies this ethos, as the company positions itself at the forefront of a burgeoning digital frontier. By harnessing the power of Bitcoin, MicroStrategy not only diversifies its assets but also aligns its trajectory with the evolving landscape of finance. In embracing Bitcoin as a cornerstone of its strategy, MicroStrategy forges a symbiotic relationship, its value becoming intrinsically intertwined with the digital currency's trajectory. The evolution of MicroStrategy into a Bitcoin-focused firm symbolizes a broader shift in the perception and utilization of money. Beyond its traditional functions, money emerges as a potent force, capable of shaping industries, fostering innovation, and reshaping the very fabric of economies.
Civilizations, they rise or fall based upon the creation and channeling of energy. And we think of power as energy delivered in a certain period of time with a focus. So it's all about firepower, naval power, air power, nuclear power. Rockefeller gave us liquid energy in the form of oil. Bitcoin is digital property. It's conveyed by digital power. Those Bitcoin miners are digital power providers, and it's the most powerful computer network in the world. So we see this as profound because there's hundreds of trillions of dollars of wealth in the analog world, and there's no doubt it's decaying. Bonds are losing value because of inflation. Real estate's losing value due to just physical decay. Stocks lose value because of competition and product cycles and acts of God. And so the people of the world, they're looking for a new idea, and Bitcoin is this idea of put your money in cyberspace where it's not going to be affected by weather and war and supply chains and all of the things that have plagued us in the 20th century.
Now, to that end, I know MicroStrategies has sort of rebranded itself. I think it's called now Bitcoin Development Company. What exactly does that mean? And are you moving completely away from the traditional business?
In recent years, the discussion surrounding Bitcoin has expanded beyond its financial implications to encompass its environmental impact and energy consumption. This shift in focus underscores a critical need for sustainable practices within the cryptocurrency mining industry. One significant point of contention revolves around the environmental concerns associated with Bitcoin mining. The energy-intensive nature of Bitcoin's mining process has raised alarms regarding its carbon footprint and overall sustainability. As the demand for Bitcoin continues to rise, so does the strain on traditional energy sources, exacerbating environmental degradation and climate change. Addressing these concerns necessitates a shift towards renewable energy sources for Bitcoin mining operations. By harnessing renewable energy such as solar, wind, and hydroelectric power, miners can mitigate their environmental footprint and contribute to a more sustainable energy landscape. Embracing renewable energy not only reduces carbon emissions but also promotes the development of cleaner and more efficient energy technologies. Comparatively, juxtaposing traditional power sources like oil with digital power providers exemplifies a paradigm shift in wealth preservation. While oil has historically served as a cornerstone of economic prosperity, its finite nature and environmental repercussions have spurred the exploration of alternative energy sources. In contrast, Bitcoin miners represent a novel form of wealth preservation that relies on digital infrastructure rather than finite natural resources. The transition towards renewable mining sources aligns with broader efforts to foster innovation and sustainability within the energy sector. By leveraging renewable energy technologies, Bitcoin mining can evolve into a more eco-friendly and socially responsible endeavor. Moreover, embracing renewable energy offers economic benefits by reducing operational costs and enhancing energy efficiency.
Now, we've got a very healthy software business, but we've now got nearly $10 billion in Bitcoin, and we've got a very large equity market cap. And we can tap the capital markets as an operating company, and we can leverage our market cap in order to issue equity, issue debt, buy back our debt. We can restructure our capital structure so that our shareholders get more Bitcoin. So just like, you want to develop New York City, you're going to borrow money and you're going to build a building. What we're doing is we're issuing securities in order to buy Bitcoin, in order to promote the Bitcoin network, lock up the Bitcoin forever, and then build the entire ecosystem. Bitcoin is an asset class. It's now the world's most popular investment asset. It's novel, it's digital, it's global, it's unique, and it's uncorrelated to traditional risk assets because it doesn't come with exposure to any given country, currency, company, quarterly result, product cycle, competitor, not to weather, not to war, not to an employee base or supply chain. And so that makes it a natural addition to the portfolio of a responsible investor. There's 10 years of pent-up demand. People have been waiting for these ETFs, and finally, mainstream investors are able to access Bitcoin. And I think that's what's driving the surge of capital in the asset class. And initially, there was a rebalancing as people were moving capital between the futures market and the miners and MicroStrategy and the ETFs. But following that rebalancing, I think the assets found its footing. And now people are beginning to realize that there's 10 times as much demand for Bitcoin coming in through these ETFs as there is supply coming from the natural sellers who are the miners.
Bitcoin ETFs have emerged as a compelling investment avenue for responsible investors seeking exposure to the cryptocurrency market without grappling with the inherent risks associated with direct ownership. Unlike traditional investments tied to company performance or affected by currency fluctuations and supply chain issues, Bitcoin ETFs offer a more insulated approach to capital appreciation. The allure of Bitcoin ETFs lies in their ability to cater to mainstream investors, providing them with a seamless entry point into the volatile yet potentially lucrative world of cryptocurrencies. This accessibility has triggered a notable uptick in capital inflows into the digital asset space, as investors seek to capitalize on the meteoric rise of Bitcoin and other cryptocurrencies. One of the key drivers behind the growing demand for Bitcoin ETFs is the stark contrast between the demand from investors and the available supply from natural sellers such as miners. As more investors flock to ETFs to gain exposure to Bitcoin, the imbalance between demand and supply has become increasingly pronounced, exerting upward pressure on prices and fueling further interest in the asset class.